Starting with the question number 5D. Seawell Corporation, a manufacturer of do-it-yourself hardware and housewares, reported EPS of 2 rupee 10 paise in the year 2016, on which it paid dividend per share 69 paise. Earnings are expected to grow 15% a year from 2016 to 2019, during which period dividend payout ratio is expected to remain unchanged. What is the current dividend payout ratio? Current dividend payout ratio is approximately 33%. It is 0.69 divided by 2.10. So it is 32.85%. After year 2019, the earning growth is expected to drop to a stable of 6%. And the payout ratio is expected to increase from 32.85% to 65%. The firm has beta 1.4 currently and is expected to have beta of 1.10 after 2019. The market risk premium is 5.5%, that is RM minus RF is 5.5%, and the Treasury bond rate is 6.25%, that is RF is 6.25%. A question: what is expected price of the stock at the end of year 2019? Then B question is provided to us. B question we will read later on. Just I am giving explanation to you of the first part of the question. We can say something like this, that year 2016, 2017, 2018 and 2019, if at all we consider right now as year 0, then this is end of year 1, this is end of year 2 and this is end of year 3. The question says that you are required to compute the price of the security at the end of year 2019, means we are required to calculate P3. So in the first part of the question, we have to compute P3. Try to do P3 answer on your own, then I will do working for you. Let us see how to make the calculation of answer. Everybody is requested to pay attention. The question says that you are required to compute the P3, that is a question. So we can say something like this. Do not write anything, let me explain you. Working note number 1, calculation of dividend per share year 1 to year 4. That is for the first working note that I am preparing. First year, second year, third year and fourth year. The dividend per share for the first year end, friends, will be 0.69 into 1.15 raised to 1. Because we can see that the question is providing the information that the earnings are expected to grow at the rate of 15% from 2016 to 2019. So now we understand it is for the first year end, it is 0.69 into 1.15. So 0.69 into 1.15, that is 0.79. Next year it will be 0.79 into 1.15 raised to 1 once again. So 0.79 into 1.15, that is 0.91. For the third year it is 0.91 into 1.15 raised to 1. So 0.91 into 1.15, that comes to 1.05. Now this answer which we have calculated like this, that can be computed in an alternative method as well. The alternative method is, friends, 2 rupee 10 paise is the earning into 1.15 raised to 1. So it is compounded for ones into dividend payout ratio 0.69 divided by 2.10. That is the way we can make the calculation of the dividend for the first year, and so on for the second and third year. Now, as far as the fourth year dividend per share answer is concerned, that is very important. 1.05 into 1.06 raised to 1. If at all you are doing answer like this, then in that case this is wrong answer. Why it is wrong answer? Because the dividend payout ratio is changing. So how to make the computation of the fourth year dividend? 2 rupee 10 paise into 1.15 raised to 3. So this is third year end into 1.06 raised to 1. So this is of the fourth year end into 0.69 divided by 2.1. I'm sorry, into 0.65. Why? Because the dividend payout ratio is changing. It is changing to 65% of the earning. So this is the way we are required to compute the fourth year dividend per share. And with that, so we will make further calculation of the answer of price of the security. Anybody having doubt up to this, please tell me. So please write down answer dividend per share from end of year 1 to end of year 4, and then we'll proceed for the further calculation of answer. So the amount of dividend per share is 2 rupee 20 paise. That is the way the dividend per share from year 1 to year 4 can be calculated. Next, working note number 2. Calculation of cost of equity. Please write down answer along with me, because now it is very simple. For cost of equity calculation, friends, we have to apply the CAPM, that is capital asset pricing model. In that, say how to make the calculation, let us see. It is RF plus beta into RM minus RF. This is the kind of formula that we have studied at our IPCC or intermediate level. The risk-free rate of return is 6.25%. So the RF is 6.25 plus beta. What is the beta of the security? Beta of the security is right now 1.40, but we are concerned that say what is the beta later on. So this 1.10 is relevant. So the beta will be taken as 1.10 into RM minus RF. That is market risk premium is provided to us directly in the question. What is the market risk premium? It is 5.5%. So into 5.5. So 6.25 plus 1.1 into 5.5, that comes to 6.05. That comes to 12.30. That is the way the K will be calculated. Yeah, before I proceed further, there is a query from a student to give explanation of the fourth year dividend. So I'm giving that explanation once again, that how to make the calculation of the fourth year dividend. See, basically what happens at say 2 rupee 10 paise is year 0 dividend into 1.15 raised to 3. So that will become the dividend, earning per share. 2 rupee 10 paise is the year 0 earning into 1.15 raised to 3 will be the earning per share at the end of the third year into 1.06. This will give the answer of the earning per share of the fourth year end into 65% will give the dividend per share for the fourth year. There is one more query from a student regarding this calculation of the cost of equity. That's over here, say how this 5.5 itself is supposed to be kept. Aren't we supposed to deduct the RF from the RM? Yes, we should deduct it. However, we can see that the question is providing the information about the market risk premium. The term market risk premium stands for the difference of the return on the market portfolio and the risk-free rate of return. So directly RM minus RF is given. So let us see calculation of answer further. Calculation of P0. Let us see that's how to calculate the answer. It is D1 divided by K minus C. I'm sorry, we have to compute P3. So P3 is equal to, I'm sorry, D4 divided by K minus C. What is the fourth year dividend per share? Fourth year dividend per share is 2 rupee 20 paise divided by cost of equity. What is cost of equity? It is 12.30% minus growth rate is 6%. So 2 rupee 20 paise divided by 6.30%. With that, say we have to compute the P3. So with that, so the price is 34.92. That is when the price of the security is calculated at the end of the third year. It is P3. Okay. Next. The B part of the question says that what is the value of the stock using the two-stage dividend discount model approach. The term dividend discount model approach is nothing else but it is a kind of P0 calculation. And the word two-stage is indicating that the growth rate is changing from 6% to like 15%. That is the reason two-stage word is used. Nothing else, but normally the way we do P0, like that we have to do it. Try to do answer on your own. Let us see how to do answer for the second part of the question. Write down answer along with me. In second part of the question, calculation of P0. In that, working note number 1, calculation of cost of equity. Because for the first 3 years, the cost of equity will change. Why? Because the beta is different. This is beta 1.10. However, for the first 3 years, the beta is 1.40. So it will be calculated as RF plus beta into RM minus RF. Okay, so what is the risk-free rate of return? The risk-free rate of return is provided to us in the question as 6.25, beta is 1.4 and this is 5.5. So here it is 6.25 plus 1.10 into 5.50. So 6.25 plus, I think that's a 1.10 into 5.5 is 6.05. Oh, sorry, 1.40. So 1.4 into 5.5, that comes to 7.7. So what happens at say 7.7 plus 6.25, that is 13.95. So 13.95% will be the discounting factor which we are going to use. Now calculation of P0. Let us see how to do it. First year, second year and third year. Cash flow, discounting at 13.95. based on that's the present value. What is the first year cash inflow? We already have found it above. It is, I think that's a 79 paise. Second year it is 91 paise. The third year dividend is 1 rupee 5 paise plus P3. P3 stands for price of the security at the end of third year, 34.92. So it is 35.97. It is discounting at the rate of 13.95%. So 1 divided by 1.1395. First year it is 8776. Second year it is 7702. 01, I'm sorry. Then 6759. Then 0.79 into 0.8776. That comes to 69 paise. 0.91 into 0.7701. That comes to 70 paise. 35.97 into 0.6759. That is 24.31. So the overall total is 69 paise plus 70 paise plus 24.31. That comes to 25.7. That is the way the P0 can be calculated. Right on answer. Write down further answer. A small note only for the purpose of understanding. Write down a note. First point. Importantly, in this question, apart from change in growth rate, comma, there is a change in dividend payout ratio. Full stop. Second point, in calculation of DPS, dividend per share, of year 4, comma, we have to take base of earning per share of year 4, comma, instead of dividend per share of year 3. Next point, cost of equity is changing. With change in beta, comma, so accordingly for P3 calculation and for P0 calculation, different discounting factor will have to be used. full stop.